Hello and good afternoon. Thank you for joining me for another episode of Lunch with Lucern. My name is David Hansel. I'm one of the founders and managing partners at Lucern Capital. We are a real estate private equity firm that focuses on acquisition and management of multifamily and industrial assets. We run both a fund business and syndication. And we started this series several months back, just trying to provide a quick 20-minute break during the middle of the day, giving you some interesting and hopefully useful information for you in your investing journey, whether you're passive or active. Today, we're going to aggregate some of the questions that we've received over the series and try to drill down on some of those questions. I think they're relevant for a lot of folks, and hopefully you will find this helpful. So we're going to get started in 1 second here as other people are filtering into the room. Again, my name is David Hansel with Lucern Capital Partners, and today we're going to be answering questions that we've gotten from the audience and viewers of the previous Lunch with Lucern. You can feel free to write in some additional questions if you wish, and we may answer on a later series. So getting started here, we're going to go through 10 questions today, and I'm going to try to provide you some good overview of each of these. So the first question, if an owner-operator is hiring an outside property manager to oversee the assets, what are the main questions the owner should ask to ensure it is selecting the right partner? So very good question. There's a lot of different things that you want to do. And just like hiring anybody, a third-party vendor of any sort, you definitely want to check references. You want to understand what their core focus is. So in real estate, there are management companies that specialize in different types of asset classes, be it multi or industrial or office or warehouse. In addition to that, within each asset class, you have different management companies of different size and scale. And like in multi, for instance, you'll have managers that will manage a C and B type class asset that wouldn't manage a type A asset or a luxury product. You'd have another company for that. So you want to make sure that the manager has the bandwidth and knowledge to focus on the asset that you're acquiring. You want to understand how they communicate and what they do with their reporting and their management structure, how they handle onboarding and hiring staff members on behalf of your properties. And so all of these things are important. You want to let them do their job, but you need to be able to have confidence in them and be able to interact. And so making sure that communication is strong is super important, and that you have a good synergy. So the next question, has Lucern experienced labor shortages in cities it invests? If so, how have you overcome these challenges? How have these labor shortages affected returns? So this market has definitely been interesting. Obviously, as we came out of last summer and interest rates started to move up, that changed a lot of what was going on in the industry because banks kind of pulled back pretty heavily on leverage and affected some of the market. But the labor is something that's been ongoing through COVID and still today, where we've had some challenges. As I mentioned, like with our management company, they hire our leasing agents and maintenance staff. And so we've had a hard time even paying above market to keep folks. And I don't know if it's necessarily an issue of, everything going on in the economy and everything that kind of changed after COVID. But these jobs, people will move in and move out. And so it's about really working with your management company to build some stickiness with the employees that report to them on our behalf. So we've come in and requested additional resources that our management company has brought in from other assets when we've needed it. It's something that you got to manage on a weekly basis and make sure that everyone's moving and hitting their objectives. So you may set out a certain amount of repairs or turns or leasing activity. And so we've been struggling a little bit with it. It definitely can have some bit of an impact on returns. Not massively, but it's like as we take units offline and we're turning them, making sure that we can get them turned quickly and done efficiently and to our standard sometimes is taking longer than we'd like. And so that is something you got to manage and be interactive with your management company on. So the next question is, how much should a real estate investor spend on marketing its property to maintain low occupancy levels? So this is an interesting question. Obviously, every deal is unique. I like to say every deal is its own fingerprint, and the marketing efforts for each project will be unique and different. So it's about coming in and doing an assessment up front to understand what the overall business plan is, and then what your strategy is to get that out to the market. So to give you two examples on extremes, if you have a beautiful Class A building, a luxury building, you're buying it as a stabilized asset, occupancy is at 98%, 97%. What you're going to need as far as marketing is very different than like project that we had in Wilmington, North Carolina. We bought a 200-unit apartment student housing deal that we turned into market rate housing. So we took almost all the units offline, over 200 units, renovated, put them back up, and started leasing. So you need a much bigger budget for something like that. And you really need to get out into the community, not even just dollars spending wise, but marketing also includes like community outreach and email communication. So you kind of understand that. And if you're in-house marketing, talk with your marketing person about that, or if you're using a third party, you can speak with them as well. Moving right along, how does Lucern know which value add projects to implement? Do you survey current and prospective tenants? So there's a lot of different things that drive capital improvement projects that we might do. One may be on a pure cost savings benefit, be it like separately metering all of the units so we're not incurring the expenses down the road and we can pass them on to the tenant. We do speak with tenants and get feedback from them. And we also kind of look at what other properties are offering that we're competing against. So something that, we'll add to a lot of larger apartment complexes that we'll acquire that don't already have a dog park. If we, a lot of tenants have dogs, we want to create a separate environment for that. And once you pick the project, then you're kind of looking at, hey, what's the cost for this? And then what actual dollars can it bring to the bottom line? So like some things you can direct charge for, like it's saying we separately meter. Now you're going to pass the expense off to the tenant, where a dog park is just going to kind of help the general overview of the property. It's hard to measure that on a per dollar basis, but you can have lots of different types of projects and you look at what it affects and then what the costs are to do that. And you should always be looking for opportunities to either drive revenue or cut expenses within your properties. So what are the key components of multifamily underwriting? So this is a whole topic on its own, and we did a series with underwriting assets. I'll touch on some of the high points. Obviously, getting all of the financials and banking info you can from the current owner or trailing 12. You want to look at a thorough review of the property and what capital type improvements you may need to make over the coming years, be it common area stuff like a new driveway or parking lot that needs to be repaved, or new roof, or things of that nature. It could be individual type projects, as far as like are you planning on renovating units, and where will they turn out as far as a market rent? So you're going to go and look at competitors in the market, see what they're offering, what types of finishes they have. And a lot of times that kind of secret shopping, so to speak, will give us a lot of indication of what we need to do. We are very active in a couple markets, so we have a pretty good understanding, but we always go and walk the competition and see what types of stuff they're doing. The other things that are really important in underwriting are what kind of financing you're going to get. Very critical, because that's going to guide how much equity you need to raise. It'll affect the returns. It'll let you know if it's going to be a profitable deal and how much cushion's in there to have issues. You're going to look at really how much upside there can be with improvements. Is that investment worthwhile? You also need to be very careful to make sure that your expenses are accurate. Are the people on payroll needed, or they have too few, too many? And the other biggest item that you really need to look at is taxes and insurance. These are items you can't really afford to get wrong, because you can't really do anything to improve them. Certainly you can go for a tax reeval, but you really need to understand when and if a tax reassessment will come and what that could look like. Many times you'll find that you need to plan in 2 years for a significant bump in taxes to properly underwrite. And if you don't do that, it's going to directly affect your cash flow and your returns and your exit price. So taxes, insurance, all of the financing that you're going to do, really underwriting the rents and the improvements that are needed for the property to maximize the best returns you can for yourself and your investors. And we look at that very carefully. We have a lot of investors that count on us to manage these assets and make good decisions. And that everything boils down to the underwriting. If you don't do a good job up front, you're setting yourself up for failure. So moving right along, does Lucern invest in other assets besides multifamily? If so, how does the team leverage its experience, different asset types? So in addition to multifamily investing, we have invested over the course of many years in flex warehouse, industrial. We're pivoting a little bit more into that market right now. We're seeing some unique opportunities, kind of like what we saw 5 years ago down in the markets we're active in the Carolinas, where there's a lot of old ownership, where rents hadn't been moved up. They were just getting some really good cash flow. They didn't have any need or desire to really manage it to its full capacity, leaving a lot of meat on the bones for an operator that is doing this full time. So we're going to continue to look and acquire multi. As far as the industrial, we already have assets in that space and experience, but it's also about building the right team. So the brokers and the managers and the leasing agents that are down in that local market, we've spent a lot of time building relationships with them to help us not only in the short term, but in the long term as well. So with the rising cost of loans, labor shortages, and inflation, is real estate still a good investment? So you're asking a guy that has dedicated his life to investing in real estate. So I'm going to tell you yes. And I do believe, and you can talk with other folks as well, both in and out of the industry, having exposure to real estate in your portfolio is very important. Whether it's 10 or 30% or greater, it's up to you and your advisors. But real estate, there's still on the part of our focus on the industrial, there's really good cash flow that we see in that space. You're still getting, strong depreciation and tax benefits that will always be there unless or until the government changes some of that, which could happen down the road. A lot of things happening when it comes to taxes and of that nature. So we'll keep an eye on that. But all of the tax benefits and depreciation help offset other gains you may have in your portfolio. It's a powerful tool, and that's why people invest in real estate and continue to do that. But also you can still, depending on what kind of asset class and investments you're going in, still be able to achieve, double digit annual returns over the life of your investment on a lot of these assets with some ongoing cash flow. So we always believe that it's certainly should be some part of your investment portfolio. And we think that, although the markets have slowed down a bit, we think that especially over the next year, it'll be a good time to dive in. We think that we'll see some unique opportunities with a low basis. There's a lot of long-term growth potential while still achieving ongoing cash flow and getting the tax benefits that come with that. So number 8, besides purchasing my home, I haven't invested in real estate but want to. How can I effectively interview a real estate operator to ensure I'm investing with a reputable person? So it does take a lot of time, and certainly if you're going to invest money with anyone, be it an advisor that's handling your retirement accounts or any investments you have in equities, you want to not only speak with them and understand what their philosophy is, and each group has their own philosophy. Not necessarily one is right or wrong, but you want to find one that aligns with your interests and goals. You also then want to look at what kind of reporting they may provide, how often they report, how often they communicate. These are all important things that are going to either make you feel comfortable or not, regardless of what the asset and the performance of the asset's doing. So you want to see, like, we have a investor portal that we built out that houses all their tax documents and quarterly updates, all the performance across their assets and all the historical distributions. So having a tool like that is important. So you want to make sure they have something to be able to utilize to communicate and provide all the relevant info. You want to look at their track record, and you want to kind of ask questions, understand what they've done, what they had projected, what the end results look like, how long of a investment horizon they are typically looking at, because you want to make sure that if you're going to invest, that the timeframes of their particular investments line up with what you're interested in. For us, mostly we've been 2 to 5 year hold periods. And so that's just another thing you want to look at. You want to, spend some time talking to them and look through previous stuff, and then also ask for references. You can, very frequently, we have a massive pool of investors that have been with us for a long time. We have some folks that are willing to talk to other investors, and you can request that as well. So definitely do your homework, spend a lot of time, understand what's important to you, see if it's a right fit, and also the asset classes they are investing in. You may be interested in owning retail. You want to find someone that owns retail centers and has a history in that space. So hopefully that makes sense and you get that. We got 2 more questions, and then we'll get you back to your work here. So I invest in a few real estate projects with different operators. One reports to me on a semi-annual basis, and others report annually. There's one more operator that sends me the necessary information my tax account requires to complete my annual returns. I'm surprised by the inconsistency with the reporting. What is the right cadence of reporting? So fortunately or unfortunately, every deal and every operator is different. There's definitely should be some commonality through the operators you're working with, but their cadence could be different, and there's no right or wrong answer. For us, we update on a quarterly basis, and we provide updates on that quarter, both on the performance of the asset, any major improvements or challenges that we're dealing with, and then how we're working on it. We do We do send out monthly emails to our database, which includes our investors and other folks, that just gives some more details about what's going on in the market, what we're doing at Lucern, and how we're thinking about stuff. So it's not specific to the individual investment, but it keeps us in front of folks. And again, it's a personal decision for you. You know, all the communication we do, the investors can go and look at any of it going back through the life of the investment by logging into their portal. So even if they're not looking there, they can go in and check at any time and send requests over if they have a question or set up a call. So you want to make sure, even if, you know, you're happy with the cadence, you want to make sure that the operators are open to fielding questions, which they should be, or providing additional information when necessary. So wrapping up, our last question of the day. What are the best opportunities for me to connect with real estate operators? I've been to several local conferences and meetups, but have really only met people who provide loans or who are brokers. Are there conferences or other events that I can attend to learn about the industry and investment opportunities? So there's a lot of different ways to find opportunities. So for our group and other groups that we know, we try and you know, put info out both publicly, you know, through social media channels and through some minor advertising and thought leadership. We speak and attend a lot of conferences. I think obviously if you're interested in a specific type of asset, if you're interested in retail, you may want to go to an ICSC, or there's multifamily conferences that happen throughout the year, and you can look up those where you can meet operators like Lucern. But you know, we're always, and I know other groups as well, are always looking to build those longer term relationships, because although we're owners, operators, and assets, we need we need investors that want to get exposure to real estate in their portfolio that allows us to continue to grow. So we're always open to have discussions about what we do and how we do it, and provide the opportunity to look at future deals that we have. So hopefully this info was helpful. Next month we'll be coming back to you again. I may have my partner Frank or Mark on for the next Lunch with Lucern. Look out for the email coming that'll share the details about that event. Again, want to thank you for taking time out of your week and joining us for this educational series. Hopefully it's helpful for you, and look forward to connecting in the future. Thank you.